Hey guys, welcome back. Well, the market today did exactly what we thought it would. It corrected itself. Because whenever we see a market get detached from physical reality like we did towards the end of last week, it always corrects itself. It may take a few days. In this case, it took the weekend, but the fundamentals rung true. The hard data came back to the tape, and we saw capital rotate back into the tech sector. Last week, it started to feel like the semiconductor sector was starting to falter or break apart. And it was all based on the market misreading macro headlines. We saw a few stories that were totally misinterpreted. One was around NVIDIA server rack configurations and the negative impact that that would have on Micron. Totally untrue. The other one was the Broadcom earnings print. How that print itself was interpreted by the market, it was misread, and it flushed not only Broadcom, it flushed the entire tech sector. So when we see a market like we did get detached from reality, like I said, it does a couple things. One, it creates huge opportunities for us as long-term investors, but the market always tends to correct itself. And let's look at somebody else who thought it was just huge opportunities. Look what Jensen called out. He put up on investing.com. He said that the chip sell-off, it created a huge buying opportunity for all of us. And he was absolutely right. I hope each and every one of you had a chance to jump in on some assets that were undervalued or lower priced in the market before capital started to rotate back into them. I know I did. I actually loaded up on some more Marvell, and I'm loaded up on some more ARM earlier this morning. So hopefully those will work in the long run. But today we are going to break down the massive technical mean reversion and explore the major structural shift that's happening right now across the AI infrastructure landscape. First, we're going to take a look at the memory titans, though. We're going to go around the horn and take a look at Micron, SanDisk, Western Digital, and Seagate. How did they perform today? Did capital rotate back to all of them? So we'll cover those thoroughly, look at how they performed today, and we're going to break down and unpack the massive supply agreements that is keeping the pricing power solidly in the hands of those manufacturers. And then finally, I'm going to break down the three big blockbuster stories that hit the tape today. They are the massive Foundry alliance between Google and Intel, the Amazon and the Corning multi-billion-dollar optical deal, and Marvell's explosive S&P 500 index inclusion. Finally, we'll map out the exact game plan for the high volatility week packed ahead with a number of critical events happening this week. I'll outline them all in the end. So let's jump into the video. Let's talk about what we saw on the tape today. But if you haven't done it yet, make sure you hit like. Make sure you hit subscribe to the channel. Guys, let's see if we can get over 23,000 subscribers tonight with this video. I think we're probably about 300 or 400 away. So let's see if we can jump past 23,000 tonight. If you haven't subscribed yet, you like this content, and you learned something on this channel, just take a moment, hit the subscribe button. Thanks, guys. Let's jump in. Let's take a look at how the memory titans performed today. Let me pull up what we saw on Yahoo Finance, because I just want you to see the scale of what we saw today. So let me pull this down. I'm going to just sort based on the stocks that had the biggest change today. We're going to go in descending order, not ascending order. So just take a look at what the most active stocks were today. This alone should give you the sign and the confidence that capital rotated back into the tech sector today. It rotated back into the memory sector and many of the other stocks that we follow on this channel. Take a look at the top names here. You have Micron, SanDisk, Cerebras. You have Lumentum, Astera Labs, Marvell, Coherent, AMD, Lam, Applied Optoelectronics. Does that sound familiar? There's all the stocks that we talk about on this channel. Those all had massive capital rotate back into them. Let's go around the horn and take a look at the memory titans. So Micron right now, we saw it close at just under $9.50 a share, picked up over $85 back. So it was up close to a 10% gain. And if you look to the right, you could see it actually got up to about $9.62. So we're still a little ways away from that $10.80 where we were. But guys, clearly you can see there is nothing fundamentally wrong with this company. You don't flush and then immediately have capital rotate back the next couple of days. It was an overreaction. It was a misinterpretation to a number of stories. Frankly, we saw retail just get shooken out of this stock. If you had weak hands and got moved, you just gave institutional capital, institutional players, this stock at a discount. I hope that wasn't anyone on this channel, but you can clearly see the stock is still moving in a positive manner in the after hours. So right now, Micron is moving back in the right direction. We got to keep our eye on it to make sure it continues to move in the positive manner, and we get back over that $1,000 psychological level that we've already smashed, but we need to get through it again. Take a look at SanDisk. SanDisk also had a nice strong day, up over 5%, an $83 gain on the day. The stock closed at about $16.42. We know it's away from its 52-week high. We just saw a week ago or so when that was at $18.61, but the stock is moving in the right direction. We see it got up to about $16.95 today. This is a high beta stock. It moves quickly. This stock could go from $16.42 up into $17.50 tomorrow. So we'll keep our eye on this. We did have some strong signals come out about the memory sector today, a huge couple different signals. We actually saw a new price target today for SanDisk. Let's see if it's on here. You can see a couple actually. Yep, down here below. Bank of America, you can see went from $15.50 to $2,100. And we could see Mizuho went from $18.25 to $2,200. So strong signs for that stock as well when we're seeing price targets move in the right direction. Western Digital, let's take a look at our storage kings. Western Digital, you can see, was up over $15 today, about a 3% gain. Closed at just about $527 overall. Stock hit $540 today in trading action and pre-market right now. It's up by about 50 or 60 cents more. Closing right now or trading right now around the $527.50 mark. And Seagate overall, Seagate picked up $29. It closed. Let me refresh that so we can get the after hours action. There you go. It closed just under $30, 3.5%, $8.76. And seeing the after hours is about another 50 cents. I did see Seagate picked up a couple of new price targets today too. Let me see. Here you go. We got one. We had for Mizuho, it went from $8.75 to $10.90 on Seagate. So this is the second price target, third price target now over the $1,000 mark. But clearly, look at all those price targets. They're all $900 up to $1,150 from Citi. So the stock is got room to move. We know we saw it up at $967 just a week ago or so. That was. I'm blanking how quickly it was. Just last week, I think, was $967. So the stock has room to move overall. And the bullish sign that I want to pull up for all of these, if you take a look at the story on the board here, you can see Micron stock bounces back in a big way. The memory trade is alive and well. So I want to cover this because this is the big macro insight that was driving the synchronized action today across the memory titans. It is a sudden realization that the physical hardware layer is heavily supply constrained. I don't know why any analysts are just figuring this out now. We've been talking about it for months and months on this channel. This sector is supply constrained, and it will continue to be supply constrained out through 2028. And with agentic AI coming in, maybe even longer than that. So I think this sector has been fundamentally re-rated. We know we talk about it on the channel all the time. People are still waking up to this. We still have some people that are slow to come around over here. So retail traders, they got scared last week of the short-term headlines, but the corporate buyers are doing the exact opposite. They're panicking about running out of components, and they are locking up long-term contracts. And I want to show you this part in the article. There's a few stats that I want to call out, but you can see first here for the Cantor Fitzgerald, their analyst CJ Muse. He said the memory trade is alive and well, and investors are at an inflection point where they need to decide if dynamics within the cyclical industry have changed for good. Let me be the first to say they have changed for good. But if we go down further, the piece that I wanted to call out, that was right here, is is this it? Hold on, there's a couple different stats. It's right here. It's the last one. So Muse said that 50% of bits across both markets, so we're talking about DRAM and NAND markets, will go towards long-term agreements by the end of the year. 50%, guys. So they're finally waking up to the fact that 50% of all bits across DRAM and NAND will be locked into strict multi-quarter long-term agreements by the end of this year. So think about what that actually means. It completely flattens out the historical boom and bust cycle of the memory market. It smooths out revenue volatility and keeps the pricing power entirely in the hands of the component makers. And when you add the fact that Western Digital is now projecting an exabyte storage compound growth over 25% for the next 5 years, and Seagate is completely booked out of hard disk drive orders for the next 4 to 5 quarters, you realize that this is not a temporary hype cycle. This is a long structural squeeze, or a structural data squeeze, and a supply constraint that is going to go on for years, well beyond 2028, in my opinion. Now, the underlying fundamentals of the memory titans are phenomenal, and they remain phenomenal. But what really supercharged today's market correction were three major corporate stories that hit the newswire. And these were not isolated headlines. They are direct evidence for what I'm calling the great bypass, or how big tech is building parallel supply chains to circumvent the physical capacity walls that we see in the market today. The first big story that hit the newswire was the alliance between Google and Intel. So let's pull that up and walk through it. And you can clearly see in the Yahoo Finance, it says Intel jumps after reports of breakthrough foundry deals with Google and NVIDIA. The shares climbed sharply by 12%. They actually closed under that. It was about 11.2% increase today on Monday. Reports indicated that Google and NVIDIA are increasingly turning to Intel for advanced chip manufacturing capacity, reinforcing its foundry push. If you scroll down here, you see Intel said that Google has placed orders to manufacture more than 3 million TPU chips by 2028 after extensive testing of its advanced packaging systems. NVIDIA is running early trials of Intel's 18A process and evaluating complex multi-chip designs as demand for AI data center components accelerate overall. So that was the first big story, but we have to be accurate with our reporting, because I don't want you to get the impression that Google is cutting off TSMC. Not at all. Analysts expect Google to deploy actually about 6 million total custom TPUs through 2028. So this is a classic dual sourcing insurance policy that Google is deploying. Google looks at TSMC's advanced packaging lines and they realize that they are choked beyond capacity. And it is actively using its cash to fund Intel as a domestic secondary foundry pipeline. It's a massive win for Intel, but more importantly, it proves that the demand for AI silicon is so aggressive that single foundries physically cannot keep up with demand in today's market. The second kind of big story that hit was this partnership, or this agreement between Amazon and Corning that you see on the screen. It says Amazon enters agreement with Corning for optical fiber for data centers. And I'm going to scroll down here. So Amazon said it entered a multi-billion-dollar agreement with Corning to get optical fiber, cable, and connectivity solutions to support growing data center footprint. Ultimately, that investment will allow Corning to expand production and create 1,000 new manufacturing 1,000 new jobs in its manufacturing facilities in North Carolina. So big sign overall for the company. We've seen Corning now with locking up deals now with Amazon, but they also have deals in place with Meta and NVIDIA. So we're seeing Amazon, it is, as you know, it's spending tens of billions of dollars constructing massive new data center footprints across the US. And they realize they're hitting a glaring new kind of reality check. And that check is that compute power is completely useless if you don't have the physical infrastructure to route data between server clusters. So hyperscalers are moving so fast, they are essentially buying out physical glass factories to prevent their networks from hitting the connectivity wall. It's exactly what Marvell talked about in their keynote presentation as well. And to talk about Marvell, that's the other story that hit, because we saw Marvell is going to be, you know, they jumped today for a number of reasons. I think they got suffered for no reason last week when their stock went down. I think that keynote presentation that their CEO laid out, their kind of roadmap, their vision for the future, I think the market responded to that. But we're also seeing the market respond to the fact that they will officially be joining the S&P 500 on June 22nd. So Marvell, it cleared its strict GAAP profitability requirements because its custom ASIC design and optical routing business, which is now about 75% of their business, is the connectivity solutions. It is growing exponentially. This index inclusion is an incredibly bullish catalyst for the company because, as you know, it triggers automatic mandatory buying from trillions of dollars of passive index tracking ETFs and mutual funds that are legally obligated to hold this stock. They are the core architects of the custom silicon shift and the connectivity solutions. They're going to be the ones that help to break down the copper wall, or we know the copper wall is moving. They are providing the solutions. They'll be able to do that. I'm also big on the co-packaged optics that they laid out their meetings as well. So The market rewarded them today heavily based on, I think, some of the innovation, but also the fact they're going to be joining the S&P 500. So those are the big stories that hit the tape today. I think had a massive influence, in addition to the market just correcting itself, had a massive influence on the tape today overall. Now let's tie these threads all together, because a lot of retail investors are misinterpreting these stories. They see Google building custom chips with Intel or Amazon designing proprietary silicon, and they think, well, maybe this means fewer orders for NVIDIA, which means that the hardware trade is slowing down. And that logic completely falls apart when you look at the physical architecture of the data center, because it does not matter if the server rack is running an off-the-shelf NVIDIA Blackwell system, a custom Google TPU, an Amazon design processor. Every single one of those specialized chips requires an absolute mountain of ultra-dense, ultra-fast, high-bandwidth memory to run. If you take memory away, the silicon chokes on the memory wall, and it becomes a multi-million-dollar paperweight, like we've said in the past. This is exactly why top institutional analysts are fiercely defending those names. CJ Muse, I want to jump back to his article that we talked about. Let me pull that back up, because there was another piece in there that I didn't show I want to talk about now. So Muse did say he sees a permanent change for the memory industry's long-term earnings power and more upside ahead for Micron and SanDisk shares. Cantor sees total revenue for memory makers reaching $1.21 trillion in 2027, with $850 billion from DRAM and $360 from NAND. For 2028, Muse said revenue could reach $1.4 trillion. That's why we saw their price targets move. So Muse raised his price target on Micron stock to $1,500 and his target on SanDisk to $2,900, representing an upside of 74 and 86% respectively from their Friday's close overall. So that's a bullish sign for the sector, for the memory titans overall. As we plan for kind of the rest of the week, it is a big week this week. Today's mean correction has set up a very important test for the entire AI infrastructure trade. The market spent Friday obsessing over short-term headlines and near-term volatility, but Monday's rebound, it reminded investors that the physical build-out of AI infrastructure continues to accelerate underneath the surface. The key question now is whether the incoming economic and earnings data confirms what the hardware layer is actually telling us. This Wednesday, all eyes need to be on the market when the May CPI or inflation report drops. A soft inflation reprint could provide additional fuel for growth stocks and reinforce the idea that last week's sell-off was primarily a positioning event rather than the beginning of a broader structural breakdown. Later in the afternoon on Wednesday, we see Oracle's earnings. They'll drop after the closing bell on Wednesday, giving investors one of the clearest windows into the enterprise AI demand and the cloud infrastructure spending. And then on Thursday, after the closing bell, Adobe will drop their print as well. And it'll provide us with another important read on how AI adoption is impacting software spending and digital workloads across the broader economy. But beyond the daily headlines, I think investors should stay focused on the big picture. Google is building custom TPUs. Amazon is locking up the optical fiber capacity. Marvell is becoming a critical architect of custom silicon and next-generation connectivity. Every major hyperscaler is racing to build its own competitive advantage. Yet, despite all of these different strategies, they all run into the same exact physical reality. Every one of these systems still require massive amounts of memory, storage, advanced packaging, and ultra-fast connectivity to function. The technology stacks may be different, but the infrastructure foundation remains the same. That's why I continue to view the memory, storage, and connectivity layers as some of the most important toll booths in the entire AI ecosystem. The companies enabling those layers are benefiting from structural demand that extends far beyond any single chip architecture, product cycle, or quarterly headline. As long as the hyperscalers continue expanding data centers, signing long-term supply agreements, and investing tens of billions of dollars into AI infrastructure, the underlying thesis remains intact. Lastly, I want to hear from you guys. Did you use last week's volatility as an opportunity to add to your portfolio, to add individual positions on any stock, or are you waiting for the next round of economic data before you make your move? Let me know in the comments below. Let me know your thoughts overall. But if you found value in today's breakdown, in today's video, don't forget to hit the like button and subscribe to the channel if you're not part of it now. I want you to join our growing community here on Market Signal because I try to engage with each and every one of you every day. It's an outstanding community. Let's see if we can get over 23,000 subscribers tonight. Guys, I hope you enjoyed the video. I hope you have a great night, and I'll see you on the next one.